Hi there. Bitcoin has been down by over 10% this week, even it has recovered a little over the past few days. But now we are in weekend and it seems like it's starting to edge lower again. Let's look at it through the Wyckoff lens and see what the whales are actually doing. If you're new to my session, I'll cover the Wyckoff stage, potential trend change, as well as key price levels. These are education content, not financial advice. The weekly chart of Bitcoin we're looking at shows that as of today, it's been down to about 2.5%, right above the green key level of 68,000. So last week I already shared that if it really is coming down for a sign of weakness, at least it will challenge the light blue key level of 74K. And it actually went more fierce than what I said last week. It went all the way through to the 58.5K level. I mentioned that in last week's session as well. When the price falls through the 74K, the strongest support zone will be between the orange key level of 58.5K and 68K. Because what happened over here, the reaccumulation, that's the reason that this is a much stronger zone that we would see rebound. Okay, so that happened exactly like I said, just in a more compressed time frame than I would expect. Because when I said if the price comes down to the 74K to set a sign of weakness, if that happens and it rebound to challenge either the blue key level of 80K or 86K, the purple key level, and then comes down to the stronger support zone. That way we have a sign of weakness as well as the last point of supply. By the way, this one is confirmed. I'm just copying this down to see whether we'll see in the coming weeks whether there would be another rebound to the 80K or 86K, like I said. Okay, two different levels. So the big picture is still more or less the same. The thing that's likely going to happen is that another period of sideways trading, if no previously bad news come out. All right, if something collapses, may it be the stock market or some major figure in the crypto industry. It happened multiple times before. This time, when Bitcoin dropped this sharp, if any of those firms go into solvency issues, then this is not going to end peacefully. Okay, so look at what happened over here again. So that's what we did last time. I shared about this bear flag back in 2022, 21-22, when the price came down. We had a similar situation just a couple of weeks back. And then when the price came down, there was 3 to 4 weeks of sideways trading. We haven't gone to that part yet. That hasn't begun because we're still at the sharply dropping period, like what happened over here. Let me enlarge this. Let's show you. So we are probably still at this stage before that 3 to 4 weeks of sideways. Okay, so we're still early in this drop if it really stop and trade sideways over here. But I did mention, while we expect it to come lower for an accumulation cycle, that's not a must. Okay, if it finds solid support and stabilizes around the orange key level of 58.5K, the reaccumulation low area, it can still slightly lower to close to 50K because that's where it ended, tested. It can accumulate again and then start to go up. Of course, it has to match a couple of things. The narrative maybe macroeconomic environment, may it be inflation, employment rate, all that, and also tech company earnings. If all those turns to the upside, everybody got a thumbs up, then the rebound to challenge higher levels get a better chance. But if all those turn south, okay, if companies miss the mark of earnings and if the stock market starts to fall, starts to, it's not necessarily a crash, but start to adjust, then this will likely get to a lower point. I already drawn a center line of the long-term playground over here that factors into, that has factored in inflation consideration for Bitcoin's price, meaning its base is low, will get higher and higher over time. But you see the timeline, the trend is actually more gradual than the bull runs that we're having. So when it comes down to test at least the center line, depending on how quickly it comes down, it can go to somewhere around mid 40,000. Okay, that's I would say not so pessimistic view. Okay, because over here, if you see the 44K, there is quite a number of candlesticks, meaning quite active activities that happened in the past. Okay, so that's why that should provide certain support by the time the price really drops to this level. However, okay, this is the main area where the 2002 to 2023 accumulation happened. But if this trend is true, if Bitcoin is really, for whatever reason, may it be institution adoption or, there are more diamond hands, and that is not going to the previous low, meaning it stays above this white bottom, that would be somewhere above 30,000. Okay, that's the top of the trading range during that accumulation cycle. So it was the platform stage, what I call, or you can call it the backup period from the sign of trend. Okay, that period has this top over here, 30,000. Technically speaking, if the price comes down in the next couple of weeks, it is hitting exactly around this area, somewhere around 30K. Okay, that's where the white line, the white solid bottom of the long-term playground is. That's the worst case scenario. Depending on what situation you are in, right? If you have a lot of capital, a lot of cash in hand, obviously you wish that to happen, and then you can get in at 30K and then wait for it to go back to, 120K and 150K, whatever the next bull run will lead the price to. But if you're holding, you have been buying the dip, you obviously don't want it to go to that level. All right, I understand. That's the tricky part, that the price is playing the psychology game with our brains. Okay, so if we want to DCA during this falling knife period, make sure you spread them across enough. That's the way I do it, just for your consideration, not a financial advice. Because during the downturn, okay, if we take reference to what happened over here, from the very first week, it dropped from the upthrust to the time it reached the panic over period over here. It took 32 weeks. 32 weeks is about 8 months. All right, counting from the first drop candle to where we are now, we're only 17 weeks in, so roughly half the time of the 2021-22 cycle. So that may take another 4 months before it actually bottom out. So that means around summertime, right after or not long after the new Fed chair is in. Okay, interesting timing. But this is just a rough speculation that if the accumulation is really going to happen at a lower level, we may be able to see the panic over stage in a couple of months' time by somewhere near middle of this year. So the big picture is kind of complicated right now because there are still a lot of people trying to buy the dip. I can tell from this long wick from the bottom, but it is a very dangerous move if you don't know your risk. Okay, of course, if you want to catch the jump, that was a pretty impressive jump or like rebound. That's a 15% in just a matter of days. So if you're catching that rebound, congratulations. And if you know when to take your profit, that's perfectly okay. But if you don't, and you want to sit there, let your money sit there for a long period of time, make sure it's not some urgent money that you need to, pay for your bills. So the micro view after the macro, we have talked about these dates. These dates are dates that originally we said this downtrend would give us a confirmation that it's going to exit the downtrend by those dates. But what happened 2 days ago? Look at this crazy volume. Okay, it's basically changed the trajectory of the downtrend. Okay, we're not going to go back to this that happened back in end of last year. So I'll shrink it, but instead we'll have to adjust based on what happened 2 days ago. So it's now giving us a much bigger range. By range, I mean the distance between the ceiling and the bottom of the channel. Okay, it's much wider than before because of a drop that happened on Thursday. So I'll extend further and then we'll adjust the date and see what are the new indications. Again, the center line that does not always cut the box in half. We have to look at the candlestick and see where they usually rebound or get rejected. Okay, you can imagine this line similar to these levels, but it has to align to the slope of the trend. So that's why it's not horizontal. Of course, if it's a horizontal trend, then that's fine. We can just rely on the key levels or intermediate levels that we've drawn. So let's move the boxes. This date over here, well, this is technically still possible if 2 days later on Monday, crazily good news comes in on the 9th. The bulls may still be able to catch that window coming up and then break through the downtrend. However, if nothing special happened, this is still a positive case when the price comes to above the 74K. That points to the 17th of Feb, just 1 day of difference between the refreshed or readjusted channel and the last one. We can skip the white line. Not that it can't happen over there, it can, just that it becomes too busy. Rather, bring it to the green key level of 68K, where the price is currently staying above. An interesting point or interesting thing, you see this small candle today. It's basically trapped between the white solid line and the green key level. The white solid line is the trading range, the long-term playground top. If you still remember that box, if I go to the weekly, it's clear. It is the long-term playground top. And then the 68K key level. That's where today's price is trading within. Okay, quite magical, isn't it? So next, if the price really comes back down to the yellow key level of 63K, which yesterday it opened at, the day before it closed right at around that level. Again, that proves that the 63K is indeed a key level. That date points to the 2nd of March. All right. So if the price trades along this towards this triangle, if the bulls successfully defend the 63K and the bears doesn't have sufficient strength to push the price further down, then eventually that downtrend breakout will be confirmed, like what happened over here back in December last year. And one more to add. Over here, that's around the 8th on the International Women's Day. That's the other occasion we would probably get a confirmation. Okay, so this level, the orange level, 58K, was tested yesterday, just that the bull successfully pushed the price to above the 63K level. You see this long wick over here, right? It doesn't mean the price can come down again, but right now, again, it's tricky because this weekend is relatively more quiet. But when we get to tomorrow, we'll see something may potentially change. Okay, it's a very long story for Bitcoin today. If you're interested to get access to these sessions 2 days earlier than the others, join the channel membership now. Here's another video for you. Thank you.